let's head on over to Davos, where Yahoo Finance's Julie Hyman and Brian Sozzi are at the World Economic Forum getting a pulse on how global leaders are prepping for 2023. They're speaking with a number of global leaders and executives across industries, and right now they're sitting down with KPMG US CEO Paul Knopp. You guys take it away.
Hey, Brad, thanks so much. Yes, we are indeed on the pulse of things here at the World Economic Forum here in Davos. Joining us now is KPMG CEO Paul Knopp. Paul, always nice to see you. Set the record straight for us. Some CEOs are saying we're in a recession. Others are saying we're headed towards one. Some say, hey, it's still growing out there. How do you see it?
I do not think we're in a recession in the U.S., Brian. I actually see some pillars of strength in the U.S. when it comes to innovation, technology. The Inflation Reduction Act actually also help with respect to spending in the U.S. You know, there's no doubt that there are challenges, too, when it comes to interest rates and inflation. But I am personally optimistic that there may not be a recession, or if there is one, it'll be short and shallow.
What are you seeing in terms of spending patterns from your clients, but also what you're hearing from your clients? Obviously, we've heard a lot from the tech sector specifically. We've also now had some job cuts happening in the financial services sector. Are you seeing sort of patchy slowdown, or how would you characterize it?
Well, in the financial services sector, some of those job cuts relate to the deal market being very soft right now. There's no doubt about it, and I expect that to rebound pretty quickly when the deal market rebounds. I would expect the deal market may rebound in the latter half of calendar 2023. I do think the deal sizes will be a bit smaller than they were in the last 12 months, but certainly see activity coming. In particular, the private equity firms have a lot of cash on the sidelines. Corporate balance sheets are really strong, so I do expect a pretty strong resurrection of activity in the deal market later in the year.
Do these would-be deal makers, Paul, just need the Fed to stop raising rates before they go out there and make a big deal?
Well, I certainly think that debt markets aren't working well at the moment, so that's very problematic. I think there's an expectation as rates start to moderate, which could happen in the middle of this year, that there will be access to the debt markets again, and that'll help facilitate more deal making.
You all just came out with a new survey of what predictions for what you think deals are going to be like this year. And even though you said we are going to see expansion, I believe it said it was only, 4% or something like that? It's not a huge expansion. Given how depressed things were, I was kind of surprised by that.
Yeah, I think there's a lot of uncertainty about that, like there's a lot of uncertainty about many things right now. So I could see upside to that. In particular, our previous survey from late last year said that 56% of CEOs were wanting to do significant M&A to transform their organizations. And the other thing that gives me some confidence, again, is all the cash on the sidelines waiting to be invested in technology, innovation, the transition to lower carbon energy sources. So I'm pretty optimistic when it comes to the deal market looking much stronger later in the year.
Are companies, if they're not going to make a big deal, are they on the verge of restructuring their operations beyond just laying off thousands of people?
No, there's no doubt that companies are trying to improve their performance in many ways. Automation is a big piece of that. Trying to spend on technology that'll help advance the work they're doing and make their operating models more efficient. That is absolutely on the radar screens of business leaders right now.
What do your clients want from you right now? Where are they most looking for guidance at a time where, as you said, there is a lot of uncertainty?
Well, they're certainly looking for guidance in areas such as emerging technology. It's been one of the big themes here at Davos this week. Artificial intelligence, cyber, really prominent discussions. But generally speaking, when it comes to digitally transforming or enabling their business models or their operating models, the spending that we're seeing in that space is continuing in a really big way. In our company, typically in a down cycle, you'd see companies tapping the brakes more on technology spending. We have seen some of that to some degree, but at KPMG, we are seeing our clients continue on their transformation journeys. I would say, generally speaking, our consulting business is pretty red hot at the moment.
One of the themes that we've been talking a lot about is noticing the tipping point for AI, what feels like the tipping point for AI. And I wonder if you're seeing that in a real concrete way in your business, or if your clients are concerned that maybe it's too early still to invest as heavily in that area.
Well, I think the two things that come to mind are, what are the applications of AI and how are the business uses going to come to fruition? And what will it disrupt? Because there's no doubt that AI is going to disrupt. We've heard a lot about ChatGPT this week, and there's other forms of AI that will disrupt various sectors of business. But the thing that's maybe been most prominent this week is what are the data security measures? What are the protections quantum safe encryption, the ability to make sure that the kinds of protective measures against cyber crime are in place to make sure that we don't become, as an American business community or a world business community, susceptible to cyber criminals.
Paul, on the topic of disruption, there's disruption now in your industry. One of your competitors, EY, is splitting out. Now, we talked to their CEO, Carmine DeCibio, earlier on. He made a strong case for splitting up the company. Is that something you're looking at?
So we look at our business model and our strategy all the time, and we have looked at our current business model, and we are absolutely committed to the model we have today, multidisciplinary model, advisory, audit, tax under one roof. We absolutely believe that model has proven to be very resilient to economic cycles. Most importantly, it is absolutely the best model for attracting and retaining talent. We see that with our own evidence in our own organization, and we think it's great for audit quality. So we are absolutely committed to the model we have today.
Is it a philosophical difference?
I think it's a question of strategy. It's a business model question. They have different challenges than we do when it comes to certain of their clients and what they want to do and where they want to play. That particular issue we do not have. So I think it comes down to a strategy or a business model question.
What's happened during past recessions to the consulting business? What do you tend to see?
Well, in past recessions, you definitely see more clients hitting the brakes in a significant way on technology spending. Generally speaking, we're not seeing that. There definitely has been some news that technology spending is down, but when it comes to the clients that we're dealing with, the significant large organizations, federal and state governments, we're seeing the continued acceleration of the digital transformation work that we've been observing the last 3 years.
So where are the cutbacks going to come then, if not in digital?
Well,
if they have to pull back somewhere, if things are slowing down.
So part of the story is that digital is seen as a way to make business more efficient. And so the journey that these companies are on, and then state and local governments are on, and federal government, is one to make their operations both more effective and efficient. So I think there's been a recognition, particularly coming out of the pandemic, that to some degree we've all underinvested in technology. Now I think there's a bit of a premium in thinking about investing in technology to make sure that we're enabled for the future the way we need to be able to compete effectively.
KPMG CEO Paul Knopp, always nice to see you. We'll talk to you soon.
Great seeing both of you.